Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. This is the show where we take you through all the stocks that are buzzing away in trade, either on the back of research or on technicals. But first up, let's take a quick check on the market. Vinny, a somber Friday coming in for the markets, but this was largely penciled in. The profit taking that has happened, the kind of moves that we have seen yesterday, just before the budget comes in, bit of a profit booking coming in on the street. In fact, the sharper cuts are seen in the broader markets right now.
Absolutely. Sharper cuts in the broader market. Nifty mid cap down almost more than 1.8% around that. Nifty small cap down 1.5%. Nifty itself is trading at the day's lowest point, down 0.7% in trade. And Sensex below that 81,000 mark, 80,925 is what the Sensex is trading at. Today, what we are seeing is the only green that is coming in is on the IT pack as of now. FMCG was also holding on to some bit of a green, but Nifty IT is the only one where we are seeing some bit of a gains there. But since we're talking about IT, let's talk about persistent system, right? And what is it that came out with their numbers? When you're looking at it, we're seeing in Q1 the revenue growth came in at 5.6% this time around, so keeping an eye out on that. The EBIT margin is coming at 14%. But what is the outlook of the company going forward? Let's bring on board the management of the company. We have Sandeep Kala, Chief Executive Officer at Persistent System, joining in with us. Thank you so much, Mr. Kala, for joining in with us this afternoon on ET Now. I want to start by talking about your Q1 margins, right? That seems like it's missed the expectation of the street, and the street is a bit worried that there is one of that has actually supported the margin. So do you think maybe we could see some bit of a pressure? What's your comment on that?
Sure. So let me give a bigger picture and then I'll quickly revert to this. So at a bigger picture level, the Q1 came in at the $22.82 million. So this basically translates into 5.6% quarter on quarter, 16% year on year. This is the 17th sequential quarter of growth. And for the record, this may be the highest any Indian IT services company has had in terms of sequential growth, especially in trying times like this. Now, in terms of the margin, the EBIT margin came at 14% compared to 14.5% last quarter. And we had very clearly set the tone last quarter itself, saying for the full year, we are looking at a flat margin for FY25 compared to FY24. So we had said we'll grow at a decent curve and we will basically deliver the margin, which is roughly about 14.5% for the full year. In any business like ours, when you win larger deals, which are fueling our growth, so 5.6% quarter on quarter may be among the best growth, if not the best in our industry for the quarter. Now, obviously, this is basically ramping up the deals that we have won, certain of which are vendor consolidation deals, certain of which are deals which are involving transition from on-site to offshore, where we need to deploy initially contractors on-site because we have to ramp up faster. That comes in at lower margin. So that is what is causing a little bit of margin turbulence. The other things are when you look at us, when we start a financial year, that is the time we make any adjustments, whether it is with respect to giving newer ESOPs, doing other employee related benefits. So there are puts and takes. Now, if one just starts to look at only the puts and not the optimizations, you can infer whatever you want to sitting outside the company. As the management team of the company, all we are saying is we'll grow at the industry leading, we'll deliver nearly the same margins as the last year. The Q4 exit will be at a better margin because we would have optimized our operations. We would have optimized the larger deal wins, offshored some, and hence there is no cause for worry. So that's where our commentary is.
Right, Mr. Kalra, wanted to prod more on the margins front. Do you think that it has bottomed out? And are you set for a 200 to 300 basis points improvement over the medium term?
Yeah, so two parts to it. Historically, July quarter is where we give the salary increases to people. In our industry, today, there's a mixed bag of people not giving salary increases, deferring it out indefinitely, versus us, we have given the salary increase starting July. So the quarter on quarter, our endeavor is to come as close to the 14% mark that we have today. And by the time we exit the year, our run rate should be such that we should be for the year around 14.5% and overall much better than 14.5% as we exit. So that would lead to the second part of what you said, the 200 to 300 basis point improvement over the next couple of years, because the exit run rate would be better. And we stand by that. Look, to optimize margins is a much easier task. To bring growth in any company, in any sector is a much harder task. We have delivered the harder task. we can optimize, and we have enough margin levers, whether it is offshoring on the larger deals that we have done, whether it is optimizing our own operations, whether it is defraying our cost over a larger revenue run rate, which is obviously panning out. So we want to be among the best run companies, revenue growth, profitability, and at times in bad economy, it is a time to take market share from our peers, and that's what we have done. So we remain confident, to your point, that we will deliver a good mix of revenue growth, profitability, set the base for the 200, 300 basis points improvement that we have been saying over the next 2 years.
Right. Also, just in terms of margins a bit more, so margins might dip below 14% in Q2. This will be mainly due to the wage hike, etc., or what are the other factors that would come into play here?
So look, that is the thing that happens as a seasonality in every IT services company. When the quarter you give salary increases, your margin goes down a little bit. So yes, it is predictable. You can look at our historical performance in the salary increase quarter, not only for us, but for any other company. So yeah, there may be a small weakness in the quarter, which is the current quarter from a margin perspective, and then we recoup. That's been the traditional trend. And all we are saying is we've put enough discipline in place so that the hit, whatever we take on account of salary increases, and yes, we want to give salary increases to our employees. We don't want to defer it. And we will recoup it, 14.5% EBIT, and then go up from there.
Right, Mr. Kalra, let's come to the positive then. The revenue growth. Was there any one-offs? Is this 5.7% 5% plus sustainable going ahead?
So there was no one-off that was there. It is a secular growth in different industry verticals. It is within, let's say, our healthcare life sciences part, which has grown the most. It is multiple deals in multiple customers, followed by multiple larger deals in banking financial services. Our pipeline looks good. The order book has been fairly decent. So from that perspective, it is a secular growth. It is not based on any one times. And look, we don't give forward-looking guidance, but if you convert the bookings that we have done into a revenue conversion trend that we have been doing, we have delivered 17 sequential quarters of growth, which is the highest sequential number of quarters any Indian IT services company has delivered in the public space. So from that perspective, we are happy where we are. We are seeing good, traction in terms of revenue growth. How much it will be, we'll let the quarter span by.
Right. Also, what about the demand on ground? Any green shoots specifically coming in from the BFSI segment or the North America side?
So far, the demand environment remains to be the same. There is green shoots in terms of little optimism of rate cuts, and the rate cuts impact the financial services sector, the biggest among various sectors. Sectors like healthcare, life sciences are a little bit more robust because the demand in healthcare is more, secular. So far, our deal wins are not based on the hopes of market improving. The wins that we have had are on the back of investments we have done over the last 18 months in building a platform called SASVA, which is our AI-led platform for service delivery, which is gaining us traction, helping us win more. So all the investments that we have been doing in technologies like AI and Gen AI, they are leading to our growth. Market environment is the same. Should it improve, that will also help us positively.
All right, Mr. Kalra, thank you so much for joining us. We will let you go on that note. But on that note, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Welcome back, and you're watching Market Fatafat on ET now. Let's get started with all the stocks that have been buzzing in trade on the back of news flows and technicals. And on the technicals, we're joined by Aamar Singh, Vice President at Angel One. Aamar, as well as on the research side, we do have Junaid joining in with us as well. So very good afternoon to both of you all. But with that, let me get started with you, Aamar. The first stock that you've picked out for us is Tata Teleservices. This stock is surely buzzing in trade. Last 1 week, it's been on fire, right? 44% just in last 1 week that I'm seeing an up move coming in. What's the view on this stock now?
Yeah, actually, if we look at Tata Teleservices, the stock really wasn't doing much, and it had been trading in a range after hitting a high of, if we go back and see, so in September it had hit a high of almost 109, and then from there it had corrected all the way towards 65 levels as recent in the first week of June. And again, we've seen that the stock has rallied, and this week itself, the stock is up by almost 40%. And over the last three trading sessions, including today's, we are seeing significant interest in the volumes as well as delivery quantity. And if we go back further and see the stock at a point of time in March quarter of 2022 had made a high of almost 290. and from there it corrected all the way back towards 65 levels, and then it's like I would say country trading. So I would say one needs to keep a close watch on this stock. Just because it has rallied by 40% doesn't mean it can't rally further, but you have to watch out for the levels. That's 108, 110. That's very crucial and important. Sustaining above that level, because that's a zone of resistance for the stock, and that was the previous short-term top. So if that is taken out and the volumes continue, we could see a sharp rally in the stock towards 140, 160 zone. So keep a close watch on this stock.
All right, moving on to the big earnings, that the strong set of show that came in from Infosys. In fact, the top Nifty gainer right now, also holding up the Nifty IT index in the green. Infosys, strong show coming in there. In fact, the revenue from operations rose 3.7% on a quarter-on-quarter basis. However, its consolidated net profit fell around 20% sequentially, largely due to the high base in the previous quarter from a tax refund boost. Well, despite that, the bottom line as well as the top line came in above what the street was penciling in. In fact, in addition to that, the better than expected numbers, the IT service major also gave investors another reason to cheer, as it raised the revenue growth guidance to 3 to 4% for the current fiscal, which was earlier guided for 1 to 3% revenue growth in FY25. Couple of brokerage notes. Bernstein is maintaining an outperform on the counter, and they've hiked the target price to 2,100. Nuvama is also maintaining a buy rating on Infosys. They are giving a target price of 2,050 rupees per share. Jefferies also raised their target price to 2,040 rupees with a buy rating, and Citi is maintaining a neutral, and they've hiked the target price to 1,850 rupees on Infosys. So that's Infosys absolutely trading with gains right now, trading with gains of over 2%.
Okay, that is Infosys results, but let's move on to the next stock that we're going to talk about. It's Shoppers Stop. Now, Shoppers Stop is down and out in trade, and why is that so? Shoppers Stop reported a weak set of numbers this time. When you're looking at it in terms of the earnings of the company, we saw the stock fall, quite sharply today. Also, as of now, down 5% in trade. Now, when you're looking at it in terms of the consolidated losses that they reported this time, was around 22.7 crores this quarter, and last year they were still in a profit. So this time, clear pressure that's coming in on the stock of the company. So yes, revenue is also not much of an excitement that's come in from Shoppers Stop in terms of a move. So retailer seems like is facing a bit of a pressure this time, and overall the revenues has come in at just an increase of 7%, 1,069 crores versus 993 crores last year. So keeping an eye out on Shoppers Stop on the back of its numbers, weak set of numbers, keeping the stock under pressure today.
All right, Aamar, coming to you, Karur Vyasa Bank is what you picked out for us. It's an earnings candidate. In fact, it is trading with the gains of over 3% right now. But in the last 6 months, 26% gains. But in the last 1 month, you're seeing a bit of a consolidation coming in on this counter. Tell us, what are you seeing on the charts for this one?
If we look at this particular stock, what we are seeing is that there is some sort of consolidation which was happening in Karur Vyasa Bank. And now the stock has taken off. So today and the last couple of days, the stock has bounced back because the stock traded as low as almost 190 and currently it's around 213. And if we go back slightly, in the second week of June, it had made a high of almost 219, 220 levels. So I think that's a level to watch out for. Sustaining over that level, the stock has a potential to rally towards 240, 250 zone, because if you look at the stock from a long-term perspective, the trend remains extremely strong. From an intermediate-term perspective, yes, we've seen some sort of consolidation happening. But again, from a short-term perspective, post the consolidation, we are seeing that the stock has taken off. And also the last 2 days, including today, we are seeing more than average volume. So that tells me that there could be more upside to the stock. The confirmation would happen once the stock starts sustaining over the 218, 220 on a sustained basis. Then we could see the stock rally by around 8 to 10%.
Okay, that's the word coming in on Karur Vyasa. Let's move on to the next one, and JSW Infra Gener. This one is an earnings candidate.
Well, yes, so JSW reported a good set of, a bad set of numbers actually. The revenue saw an uptick of about 10% coming in at 1,010 crores, but there was a pressure on EBITDA margins front where we saw some pressure as well as on volumes. And if you look at net profit, it also saw a downtick of about 8%, reporting at 297 crores this quarter versus 322 crores last quarter during the same period.
Okay.
Now moving...
Let's just wait up because yes, this Microsoft outage, that's become a big issue. Let's go across and listen to Rajiv Chandrasekhar who's talking.
Now, we have seen that this global outage has caused massive problems, and this outage has caused the outrage of the people. Now, when the hospital systems are not working, the banking systems are not working. In US, 911 is also not working. The Delhi Police PCR have basically stated that yes, the system is working. Yeah. So, what exactly is the percentage of the systems that are using the sectors that are using the Microsoft system that are being impacted? Any ideas? That just to give an explanation.
I have no idea, but I think it is very high percentage. Even though in recent years there have been alternates and there have been competitors to Microsoft, because Microsoft used to dominate this space. There have been now, for example, there is an Indian company called Zoho that competes very well with Microsoft in terms of the applications that they offer. So maybe it is time now for companies to ask the question whether they need to diversify their enterprise software and go into other types of vendors, or within the same vendor ask for certain guarantees in terms of fail-safe features built into the platform. But to all of those people who today are impacted by this, I will only say this as a citizen, as a fellow citizen. Please don't panic. I know this is very disruptive. This is very chaotic. People who are lining up in a hospital are frustrated that the system is not able to tell them what they require. Or if you're an airline, you're not able to check in and get to the destination. But my request to you humbly is not to panic. There is nothing that panic will do. It cannot accelerate the process. It cannot speed up the process of Microsoft bringing the system back. Microsoft is a global company, and there are certain ways of recovering and restoring these large complex systems, which I am sure, and I'm following on Twitter, they are doing. So this is not the time to panic. This is not the time to lose the cool. Be calm. It is a problem. We should just deal with it.
How much time it would take, sir?
I have no idea. First of all, because I don't have an idea on what the cause of the problem is. If I knew with some clarity on what the cause of the problem is, then I could estimate that it would take this half an hour, 2 hours, 10 hours, 20 hours. But I have no idea because Microsoft has not really come out and told us. I'm sure they have told the government, but it is not clear to me on what it is that has caused the problem. If it is a very serious issue, is it a hack? Is it a huge technical issue? Is it some small glitch? That we will know when Microsoft comes out clearly and tells us what the problem was and what caused it and what they will make sure they will do to make sure it never happens again.
Thank you for speaking to us. So that was former IT Minister Rajiv Chandrasekhar, who has been working in this field for...
Absolutely. So that's the word coming in on there as well. Rajiv Chandrasekhar talking about the current issues in terms of the Microsoft outage, and he also alluded in terms of, people looking at different options and, widening the scale as well. But let's keep it going with more stocks that are in focus. And Aamar, SBI Life, that's the one you've picked out for us. What is the move that one could be expecting for SBI Life now?
So if you look at SBI Life, the stock has been on a tear, I would say, post the sharp correction during the election results week towards 1350 odd levels. The stock is currently trading around 1650, and if you look at the structure of the stock on the long-term charts, that continues to remain extremely strong. And if you go back and see, so in March it had made a high of 1570 odd levels. So those levels have been taken out and the stock is trading significantly higher. Also, what we are seeing is that on one of the time frames, that's the intermediate term trend, now there is a very strong bullish momentum building up on this sort of trend, because earlier the short term trend was definitely positive, long term was positive, but intermediate trend wasn't positive. Now it's positive while at the same time it's gaining momentum. So that clearly shows that the stock could rally further on the upside, and also we've seen some significant volumes in terms of the average daily volume. So that's one positive aspect. So stock has a potential to rally towards 1680, 1700 levels. On the downside, the stock has got good support coming around the 1590, 1600 levels.
All right, moving on to another counter from the insurance space, ICICI Lombard General Insurance. Jinay, that's the name that you picked out for us. It is facing a bit of a pressure in today's trading session. Tell us, what's the news flow?
Well, yes, so ICICI have actually initiated a sell rating on the counter with a target price of rupees 1,575. What they believe is that high B2B skewness and high headwinds in B2C is what company is facing. Now, if we talk about more factors, then proportionately high and swiftly increasing mix of B2B oriented business is driving higher susceptibility to the lumpy risks of the company. Also, rising competitiveness pressure coupled with reducing distribution modes in retail segments are likely to ignored in current richness is what ICICI believes. Also, they say on the medium term there are some profitability concerns which looms around the company.
Right, Jinay. Okay, so keeping an eye out on ICICI Lombard. But with that, we are absolutely out of time in this edition of Market Fatafat. So thank you so much, Aamar, as well as Jinay, for joining in with us. And thank you so much, viewers, for tuning in to ET Now. It's a goodbye from Ankita, myself, as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.